Good morning, everyone. Myself, Anjali Nair, on behalf of Kirin Advisors. It's a pleasure to welcome you all to the Investor Conclave Investor Connect Summit 2026, powered by Avinash Mentor and co-powered by Kirin Advisors. Today marks the first day of our two-day summit featuring a powerful lineup of focused management meetings. This is the first interaction of the day is with Maiden Forgings Limited. From the management team, we have with us Mr. Nishant Garg, the Managing Director. Good morning, sir. Welcome.
Good morning. Good morning, Anjali.
From Avinash Mentor Research, we have Avinash, sir. Good morning, sir. Welcome.
Yeah, good morning, Anjali.
With that, now I hand over the floor to Avinash, sir. Over to you, sir.
Yeah. So, good morning, everybody, and thank you for attending the Investor Conclave today. Today, we'll be talking about a company called Maiden Forgings. In fact, we had done the IPO, video for the company, and we are very positive on the company's long-term prospects. To tell you something briefly about Maiden Forgings, it's a company started in 1988 and has a very large customer base, operates from Delhi. And we believe that this is going to be that is FY27 is going to be a very strong turnaround year. The company is very hopeful that all its expansion projects plus its kind of ramp up plans are now get crystallized in FY27, and we feel that this is definitely going to be a good investment opportunity. So without wasting time, Nishanji, I'll hand over the job of talking to the investors. काफी लोग इंतजार कर रहे हैं तो sir, I would suggest Nishanji, you can make a small introduction of the company for people who are just attending this for the first time, and then I think we can take Q&A.
Thank you, Avinashji. Thank you for the opportunity. So, like Avinashji already told, company has been there for around 35 years now, more than 35 years. Originally started with a steel bright bar manufacturing plant for carbon steels. With time, uh, the product portfolio was widened. We added carbon steel wires in the 90s itself. Then major milestone came in when the management was changed. My father started the company in 1988, but in 2011 it became a completely family-owned business with me and my mother joining. So post that, the growth tangent changed in 2011-12. Our total top line was around 13 CR, which included just two products, that is carbon steel wires and bright bars. Then this 15 plus years of journey has been like including alloy steel bright bars, alloy steel wires. Then came the second unit of the company in 2016, where an art of the state plant was established, which was around four times the area of the original parent plant unit. In that, we started this production and sales of stainless steel bright bars. That's when around 2017, 18, 19, we also started with minor exportings in the same product category. Then in 2018, 19 came the next milestone for the company, wherein we started the unit third, which was bigger than unit second. There we added on stainless steel wires as one of the product lines. Uh, all both these plants had absolutely new technology which was prevalent in the sector at that time. We at that point of time we added like 12,500 square yards of land area for all these expansions, and we started the sale and reached around 200 crores of sale by say 2020-21. Post that, the company was listed on BSC SME in 2023, April 2023. Before that, we imported a plant for as our unit one. The original unit got empty in 2019 when we started unit third. So there we required a compact, nice plant which is capable of producing not that high a volume, but a good margin for the company. So we started with the pneumatic nails in stainless steel and carbon steel. Uh, so that was a plant imported from Taiwan. The operations for which effectively started in 2024, 23-24, and there we were, our samples got approved because most of the market for this product comes from the US. So we tested that product in the market and did all the got all the approvals that were required for the product. Now from after that, due to the tariff issue and everything, there was a hindrance for say 6 7 months. But from last 5 6 months, that you can say effectively from January February this year, the product has also taken off. So currently we are catering 8 product lines: carbon steel, stainless steel, and alloy steel, bright bars and wires in each category. So 6 product lines, and stainless steel and carbon steel pneumatic gun nails. Uh, so 2 product lines, so total of 8 product lines, and SKUs expand beyond 3,500 SKUs at present, which include uh, products made out of special steel also, as well as there are many special profiles, and we are amongst Maiden Forging is amongst very few players those are able to produce those kind of SKUs. So it's kind of in North India. So it's kind of a monopolistic market for us over here. Then other than this, the customer base that we must be catering to right now is uh, beyond 450 customers which regularly buy from us. As far as the USP of the company is concerned, we have one of the highest retention rates in the industry. More than 95% of our customers are retained, and at the same time, we are acquiring new customers. So, over the last 2 years, also, I think from 350 to 400 customers, the base has gone beyond 450 customers. The reason specifically being every facility for producing bright bar wires or nails lies in house, so that gives us a edge in terms of costings as well as deliveries. So we have a fastest delivery model in the industry. For example, a product, let's say carbon steel bright bars and wires, they the standard industry norm is of about 10 to 12 days, whereas we are supplying that within 2 to 4 days, and that too on time. Like we are already taking a shorter delivery, but yet we are delivering on time. So that is the case. Same goes for stainless steel. We are delivering in around 30 days, whereas the industry parameter is of 70 to 90 days kind of a thing. So that is the first USP. Second, like I said, that we are capable of producing utmost quality, not just in the terms of the basic material, but also in terms of specific SKUs that, like I said, has a monopolistic behavior, because we have that technical capability as well as the machinery to produce those kind of products. So second is quality, and the third one is obviously the service. Uh, because we are in a steel sector, but it is not hardcore commodity sector, because we make the steel ready for certain applications. For example, the booms of the JCB requires a hard material, yet a smooth surface for the for the movement of the boom. Then this car steering requires completely different kind of mechanical properties. So we are playing with those mechanical properties, and there are chances that things can get like not 100% accurate at times. But despite that, the complaint rate is the least. We have like we easily take returns from the customer if they complain, but still it is below 0.5% level. If we talk on a monthly basis, what is the return rate? Maybe point 0.3, below 0.3% actually. So that is there, and we are hearing to the complaints very in a very positive light, and that is why our customers remain retained with us, because they know if anything goes up or down in the product, then we are sitting there to help them out and to provide solution to that problem. So that is why through our service we have built this trust in the industry, and that is actually the biggest USP that we have. So this is pretty much, and that is why we expect a great growth in a short-term future. With now coming to what is going on currently in the company. So last year's number were like we closed at 235 crores, 234 crores annually, increase of about 12 to 13% over the previous year. Uh, Now coming to this year is like I have been saying in multiple IR calls for the last 2 years that 26-27 is going to be a turnaround year for Maiden Forgings Limited. The reason being our new facility in 20 about 20,000 square yards is already on the way to start, which we expect as on date to start within 2 to 4 days within this week itself. We are sitting on Monday. By Friday or Saturday, we expect that to be operational. Uh, and one of the units has been already, the second unit has been already shifted over there, and third unit will also shift over there. And we would have a consolidated facility with two new products added, that is galvanized, cold dip galvanized wire, which is a horizontal integration to our existing products, as well as stainless steel components, which is a forward integration to our stainless steel wires and bright bar products. So these two products we expect to start the commercial production from this Diwali. And despite this shifting and all in the first quarter of this year, we have managed a growth of over 20% in the quarter one, of about beyond 20% actually, uh, as per the current numbers, and we expect this growth to be even higher in the coming quarters. That is why we are quite bullish about the growth story of Maiden Forgings from this year onward. Last 2 to 3 years post IPO were majorly about building a solid foundation on which a fast growth can be handled in a very right manner, optimum manner. That is why we took slight time, but now, as per like, I'm quite bullish about my vision that we would be giving a very high growth in coming 5 years time. The year-on-year growth is going to be tremendous, and we have cleared all the uh, hassles that a small company has, and we are prepared to be a bigger company. So that's pretty much from my side. Now I'll hand it over to Avinash ji, and let's have a discussion ahead.
Yeah, I think thank you, Nishan ji. बहुत अच्छी तरह से you explained about the operations. Participants, now the floor for question answer session is open. So I would suggest that whoever wants to ask a question can drop their questions in the drop box or raise their hands. I think we can take question and answers from the participants.
Yes, sir. Participants, the floor is open for Q&A session.
निशान जी, I'll start with the first question. मेरे को बताइए सर,
Definitely.
पोटा पोटी FY27 में जो ग्राउंड लेवल पे आपको सिग्नल मिल रहा है यूजर सेगमेंट से, सर,
Hmm.
how is the market shaping up compared to last year, and is there any cost push inflation as far as basic raw material prices are concerned, क्योंकि स्टील और मेटल के प्राइसेस काफी बड़े हैं, तो इसका
Hmm.
असर हमारे ऊपर कितना आएगा? और what you said is right, like now the new unit is going to start. So typically, in the very first year, what kind of capacity utilization can we expect from this new unit, which you were talking to us?
See, Avinaji, markets post-COVID, be it the steel sector, be it the mm, paper sector, be it any sector, they have been post-COVID very volatile. Everyone is well aware with that because there are too many technological advancements. Then the global geopolitics is going very ugly in the recent times, as everyone can see. Over the last 1 year, we have seen a lot of things. So the markets definitely are volatile. Steel market is also at the same time very much volatile. But if we look at the last year itself. We will not go in the long history, but if we talk about the last year, like I said, around 11 to 12% of the growth we had on year basis in terms of revenue. But in terms of volumes, we expanded by 15 to 16%. Majorly contribution for that reduced revenue was the price volatility, right? Similarly, if we talk about this year's growth, like I am estimating that there should be in the first quarter itself, we should grow by 20%. And our management's primary focus is that how we increase the volumes. So that volume growth would also be around 20 to 25% bandwidth. Okay, so that the revenues would just correspond, right? So we are much more focused on the volume scheme, because we know that even in the worst of the case scenario where the markets go worst, whether in the future or how they went last year, in any case, if we have retained a lot of customers, if we have acquired a lot of customers and our volumes are growing, the growth impact has to come. No matter what would be the geopolitical scenarios or the market situation. So our primary focus is on the volumes as well as the product expansion, so that we can see, if we go by just one product, you know, the margins are bound to reduce. The more we increase the volume, the margins are bound to reduce. That is basic economics. So we are much more focused on a higher margin product, higher complication product also, I can say, like, which is hard to produce for others. So we are upgrading ourselves every year, and now the public will see a lot of upgradations in Maiden Forgings from this year onwards in terms of the product addition and in terms of the margin additions. So there would be a lot of things to see.
अच्छा निशान जी, वन एडेड क्वेश्चन विच आई वांट टू आस्क यू इज दैट सर, इस साल हमारा कैपिटल एक्सपेंडिचर कितना होगा FY 27 में? आर वी प्लानिंग एनी लार्ज एक्सपेंशन और वेदर इट विल बी रूटीन कैपेक्स?
No, we have already invested around, say, 7 to 8 CR in the capex over the last 6-7 months, and a similar amount would be further invested during 26-27. So as per the turnover, it's a good good capex. Okay, but the good part is that we have done it mostly from the internal accruals. We haven't, during the last financial year, we didn't raise any kind of debt funding or equity funding whatsoever. So debts have in fact reduced slightly vis-a-vis the last year. So everything is self-funded. The company is quite capable of funding its capex. Yeah, definitely. If we after September, once we have achieved certain targets for the H1, maybe we plan one of the capex is pending. For that, we might raise some funds. Too soon to say how we'll do it, but definitely, if that project we we plan to expedite in this financial year itself, then definitely we'll do it.
Okay. Then fine. I think Anjali, I think you can we can invite the other participants now.
So we have some questions in the chat box. The first question is from Ms. Vidhi Purohit. She is asking you highlight a 48-hour delivery model as a competitive advantage. How difficult would it be for competitors to replicate this capability?
It will take them a few years to perfect that model, because we have perfected it in maybe 12-13 years. So it will take them time to replicate, because the sourcing of every component of the supply chain has to be optimized, from the raw material procurement, ordering of the raw material, till the delivery to the end customer. So perfecting every component of the supply chain is quite difficult uh, and time consuming. So I think it is going to take a few years for any competitor to replicate that.
Thank you, sir. So the next question is from Prachi Patil. She's asking, FY26 revenue has recovered after FY25, but PAT and EBITDA margins have continued to decline. What are the key reasons and when do you expect margins to normalize?
Prachiji, the margins wouldn't just normalize, but from this year onwards, it's going to be much more in the upward trend, both EBITDA and PAT, obviously. So last year's decline was majorly because we were busy increasing the volumes of the existing products, and the macro conditions were very, very, very bad during the last financial year, up to Q3. So, despite that, we were able to manage a growth in the revenue. So that was first reason, the macro factors combined with the growth in revenues. And second reason was this tariff thing hindered a lot of sales of our pneumatic nails and stainless steel to the markets abroad. So that has been, 90% resolved, and now the export sales are quite booming, in fact, over the last one quarter. So I think that impact would be visible this year, as well as the as well as I feel that the India's position, like an Indian manufacturer's position in the global market, uh, is now highly improving, as people are looking again towards India to import their needs, especially for products of steel. So that is business sixth sense that I am getting from last 3 4 months, and that is very much visible in the numbers as well.
Thank you, sir. So the next question is from Bhumika. She's asking, you're focusing on stainless steel products and pneumatic nails, which carry higher margins. What percentage of revenue do these products contribute today? And where do you see this mix over the next 3 to 5 years?
See, as far as the current numbers are concerned, stainless steel and nails business, I think contribute in terms of absolute revenue, it contributes about 30 to 35% presently. But in terms of volumes, it just contributes somewhere between 10 to 15% because the value is so high. So that is why they contribute more to the revenue, but less to the quantities. Now, one more thing that I forgot during the introduction, that right now, our focus areas, one is obviously the plant consolidation and expansion. The new land is very much capable of supporting our expansion plans for the next 5 years, let's say till 2030. So we don't have to again go for land acquisition and building it from the scratch, like a greenfield project. So we have that advantage. So now the second focus of the company, that is for the coming year or coming 2 3 years, is uh, increasing our exposure in the defense sector and the technology sector and the infrastructure sector. That is B2G sales. That I just somehow forgot to mention in the introduction. From last 18 months, we got multiple registrations from DRDO to ordnance factories, at least 5 6 registrations, as well as we started the supplies last year to reputed B2G organizations such as HAL, NTPC, BHEL, and multiple. And currently also there are few big orders that are in the pipeline already, which are under production. So that is the focus, and we are catering and developing products that are required by such organizations, whether they are substituting the import, they are importing certain steel bright bars of different kind from Taiwan. One of those product is under development at our facility also. So we are targeting those kind of products. The automatically the margins in these products are far more better than what we do. So in the coming 2 to 3 years, I expect that in I'm just talking about in revenue terms right now, these products should contribute 60 to 70% of the total revenues of the company. For example, if we target 400 crores in coming 2 3 years or 500 crores, then maximum 70%, like 300 to 350 crores, should come from these products only. So that is the target. And because we are now having that kind of a market with B2G added to our customer portfolio, this segment will, help us boost the sales of such high margin, high value products. So that is pretty much the target. So second focus area is definitely catering to the B2G segment. And the third focus area is the exports. So first is the plant consolidation and expansion with a completely green plant within next 5 years. And then second is the B2G segment, defense sector. And the third focus is exports, definitely. So I see a huge jump in these product revenues in the coming 2 to 3 years.
Thank you, sir. So the next question is from Prachi. She is asking, you have mentioned a 53,000 MT installed capacity, but produced around 35,500 MT in FY26. What is the roadmap to increase utilization? And by when do you expect to cross 85% utilization?
Uh, See, this year it was around 35,600, I believe, and last year it was around 31,900. So there is a growth, and this year I expect to cross it beyond 41,000 to 42,000 bandwidth. So that would give us around utilization of 80 to 85% bandwidth only. But along with that, this year, because of consolidation from October onwards or November onwards, our capacity would go up to 63,000 tons. 62 to 63,000 tons for added capacities of GI wire and stainless steel components. So next year maybe 80 to 85% of that, but again next year we will again increase the capacity. So that is a circle that's going on. But as far as 85% is concerned, 80 to 85% we should achieve within this year itself.
Thank you, sir. So the next question is from Ms. Bhumika. She's asking, the in-house pneumatic nail plant has been commissioned after an rupees 8 crore investment. What asset turns and return on capital do you expect from this business once it stabilizes?
Uh, the nails plant was established with a capex of 4 crores first and foremost. And I think the run rate we are going on is the return on capital. Like we will recover the entire capital within this year itself. So I think 3 years. Yeah. So in 3 years we'll recover. But yeah, if it had gone operational previously, then we would have recovered it in 18 months time maximum. So that is the thing. So within this year, we should recover the entire capex, and then there should be a good return on investment after that once the asset is free.
Thank you, sir. So the next question is from Mr. Pratik. He's asking, what is Maiden doing differently versus its peers to capture market share from larger players especially?
Pratik ji, the major difference is in the vision and the execution, I would say, because the technicals may go up and down every moment in a high growth business. The metrics might change from time to time, uh, but the vision is by 2030 we should be positioned as a company which is known for its innovations, which is known for its bold steps to create newer products. So that is the first and foremost difference between Maiden Forgings Limited and the peers. And secondly, like I said, we waited for 2, 3 long years because the market situations were also not in the favor to expand, rapidly in those last 2 years. But now the time has come, and we also during this period, as an execution strategy, we have established a rock solid foundation. Because if supposingly a company goes from say 200 230 crores of sale to 1,000 crore sales in say 4 to 5 years time, so that growth is very difficult to handle for most of the companies. Up to 200 crores it's easier, comparatively easier, but 200 to 1,000 crore in 4 to 5 years time is a very very rapid growth. So to ensure that the company doesn't gets into any kind of difficult situation due to this high growth, and the systems remain intact. We were working primarily on the systems, and from this year onwards, we are just, the blueprint is rock solid, it's ready, and we are just busy with the execution for the next 4 years. So people should, that is the major difference uh, between the peers and Maiden Forgings Limited, that the vision and the way the things are planned to execute, that is pretty much different from the peers. And maybe I can tell the next positioning of Maiden Forging would be such that it would be hard to find exact apple to apple comparison peers for Maiden Forgings Limited. So that is the difference. Yes.
Thank you, sir. So the next question is from Ms. Vidhi Purohit. She's asking, you have secured registrations with OFB, HAL, and Semilac. Can you help us understand the revenue opportunity from the defense segment over the next 2 to 3 years?
Next 2 to 3 years, I expect from defense segment the opportunity, like the market is very, very big. Every one of us knows that. But for particularly if I talk about Maiden Forgings Limited, my expectation is that at least 400 to 500 crores of sales would be done by Maiden Forgings in the defense and B2G segment in the coming 2 to 3 years.
Okay, thank you, sir. Next question, please.
निशान जी, आई हैव गॉट वन क्वेश्चन.
Yes, please.
मेरे को बताइए सर, कैन वी एक्सपेक्ट सम डिग्री ऑफ ऑपरेटिंग लिवरेज आने वाले 1-2 साल में, क्योंकि कैपेसिटी तो हमने काफी बढ़ाई है. इंक्रीज्ड आवर कैपेसिटी, so with top line growing by 20%, you said, which is a very good sign. So can we expect that थोड़ा बहुत ये operating leverage to play out for Maiden Forgings? I mean, इसके बारे में बताइए.
Yes, operating leverage is going to be very, very high post this Diwali. Reason being, both the plants would be consolidated together, as well as the new products. So, see, definitely running operations at 3 locations and running operations at 2 locations, and that too, one being the majority of it, and also having the capability to support next 5 years of expansions without any acquisition of capital assets, right? So that is a very, very big operating edge actually. With this consolidation fully done by say October or November, there would be huge reduction in the administration costs despite the increased quantities. So basically the efficiency question, that is input versus the output, would have a huge gap by that time. Plus, like I said, one a small line in between, but it meant a lot, that we are targeting to be a green company by 4 to 5 years. Hello, hello.
Yes,
Yeah,
Nisha.
yeah. Just a minute. Just a minute. Hello. Am I now?
Yeah,
It's
yeah,
all. Yeah,
yeah.
yeah. So, like I said, there was one small line which meant a lot, that within 4 to 5 years, by 2030, we target to be a completely green company. Like whatever byproducts we are, whatever pollutants or anything we are creating, we are going to make a byproduct out of that. That is the part of the plan. So already we are working on, like the new plant has a solar capability. So we are, going for green technologies which are requiring investments at this moment. But in 4 to 5 years time, it is going to give us a huge, huge competitive advantage in terms of costings. So the efficiencies of the company would have skyrocketed by then, as well as the uh, tag of being a green company. I'm saying tag of being a green company would give us an added advantage with, as you can see in Europe, it is going on that green steel should be there. So we are also targeting that. Like I said, that we have prepared a blueprint for this 200 crore sales company, which is able to handle a sales of even 1000 crore, 5000 crore. So we have prepared the blueprint like that, and that is why that requires high level of efficiency in the company, and we are ready for it.
Thank you, sir. Next question, please. Participants. Sir, we have one. Okay, Avinash, sir.
I think, Nishanji, on the export market, if you could tell us something, because export is going to be a big opportunity. सर एक्सपोर्ट मार्केट में कौन से मार्केट हम टारगेट कर रहे हैं, कहाँ से आपको ज्यादा इंक्वायरीज आ रहे हैं? इफ यू कैन टेल अस सम आइडिया अबाउट what is the kind of export market potential for our products, क्योंकि as you said you are getting into niche products and now you said you are looking at a completely green company. तो सर थोड़ा सा एक्सपोर्ट मार्केट का फ्लेवर बताइए. व्हाट इज द काइंड ऑफ आउटलुक वी कैन एक्सपेक्ट इन द नेक्स्ट से 2 to 3 years फ्रॉम द एक्सपोर्ट मार्केट?
See, India in itself is a huge market for us, firstly. But that being said, we have a Maiden Forgings Limited has a very, very big advantage. That is, it is still a minuscule player in the industry. So that might seem to be a disadvantage for some, but I see it as a major advantage for us. So the market size for us is huge. And when we talk about the global markets, it's beyond imagination. So we have a huge market. The countries, because we are catering to the niche products, that is why mostly our traction that is currently going on, whether the sales are produced or the flow of inquiry, that comes from the US and Europe, because they are being the most developed nations of the planet. So most of our traction for the niche products is coming from there only at the moment. But what we are pushing from our marketing efforts, that is to enter the Gulf markets, because from the Gulf we get a better connectivity to the African markets, to even the American and European markets. So that is the major area where we are focused and targeting. We in fact initiated the things of our own warehousing and office in Dubai or Abu Dhabi in the February month 2026. But due to this war thing, we paused the plan and we are just waiting for the dust to settle. And once the war dust to settle, once it settles, we would be very aggressive on that plan again. Maybe the location changes, because as people are estimating that post this war, Saudi would be pushing Riyadh also as next Dubai. So we are looking for that. So let the dust settle in a few months, and then we would be able to talk better about this plan.
ठीक.
Thank you, sir. So we have one more question in the chat box. What is the percentage of share of revenue from top 5 clients?
Maybe 5%, 5 to 7%, maybe. Like we have a huge customer list, so that is why we are not very much dependent in terms of revenue on any single client. So even the top 10% would contribute between 10 to 15%. So it's quite divided.
Thank you, sir. Next question, please.
अविनाश जी, एक क्वेश्चन का मैं आंसर करना चाहूंगा, क्योंकि someone I think asked in the chat box earlier, somehow it got missed.
Yeah.
There was a question where someone was asking that what should be the specific parameters that the investor should be looking for in Maiden Forgings in next 2 to 3 years. So definitely the revenue and the profit growth. These would be the two parameters that I would suggest anyone to look out for. Along with that, there is a perception factor, you can say, or the positioning of the company. If I talk in the technical terms, you need to definitely see the switch from a commodity business to engineering business to a innovation business. So that shift would be interesting to see, and the growth should follow behind that. That is my psyche at the moment.
Okay.
Thank you, sir. Participants, if you have any questions, kindly raise your hand or drop your questions in the chat box. So we have one question from Mr. Pratik. Yes, Mr. Pratik, you can go ahead and ask your question.
Hi, thanks for the opportunity. My question is, what is the percentage of revenues that we derive from our top three or top five clients, and what are the efforts that are being taken for diversification of revenues from a client perspective?
Is that your recent photo, Pratik? Very young investor. That's what I was seeing. Okay, so see, like I said earlier, also that top 5% of our clients might also not be, might be giving a revenue of 5 to 7% only. So you can say that most of our client would be giving us, even the top most clients would be giving us a revenue of 1 to 2% only. So it's quite a diversified business. And in terms of diversification for the customer, like the two new products that we are bringing in at the moment, galvanized wire and stainless steel components. One is forward integration and one is the horizontal integration for us. Both the products have three common parameters. First and foremost, we don't need any marketing budget to make 100% utilization sales for the phase one anywhere, because those products have been brought upon the customer demand, the existing customers demand. They said that we are buying already from you carbon steel wires or alloy steel wires. We also buy galvanized wires, but for that we have to go from Delhi to Mumbai to buy that, or to Maharashtra or to Pune. From there, it's coming up. Or in the north, only one player is playing up that. So they said, we are happy with your products, with your services, and you have been catering to us for 5, 7, 10 years. Now we also look that you should provide us with the galvanized wires. That is why we added galvanized wires. And of course, when a product is in such a shortage that one of the player in North India is enjoying the monopoly, or things are like that. So definitely the second parameter for our selection of product was that the margin is better. Margin percentage is better from the existing products. And the third part is, because it aligns with our existing products, so we have the technical expertise to produce the utmost quality of the new products. So in that ways, we don't require to spend any huge costs over the marketing. And the day we start producing, within 3 to 6 months, we would be utilizing the 100% capacity of the new product and looking ahead to increase the volumes. The payment methods we know of our existing customer, they pay us on time, and or even cash payments as soon as the material is delivered. So we know entire thing, where we have to sell, how we have to sell, what margins we are going to gain. And within just 3 to 6 months of installation, we can start, we can produce 100% of the capacity. So that is how we are giving our customers added value. That we always say that you can always rely on us and for your all your bright product requirements, and under the single window they'll get this product. Similarly, for stainless steel components, we are adding value to our customer because they buy stainless steel bright bars from us. What we observed in the data of last 2 bright bars, that was that is the customer for Maiden Forgings Limited. He or she is buying from Maiden Forgings the steel bright bar, and 50% of its deliveries are being made to its vendors, okay, who are further making components and providing to the end customer of Maiden. So we saw that what he or she is doing that they have a CNC workshop, and they are doing making few products at their end, and they have approvals from big companies such as Minda, Bosch, etc., etc., who are procuring from them, and they are subletting their 50% of the job to the vendors to whom we are selling the bright bars. So we realized that if we cater to them the final component, then our sales would also increase, and instead of going via the vendor channels, the straight entire margin of two components of the supply chain will come to us, and we have a pre-built market for our product. So that is why we are going for this product, because we know from day one our sales would be smooth without any marketing expenditure or budget, and obviously we get profit margin of two products instead of one. So that is the idea behind that. And as I told you, the we chose this product, so we are going with a very much data-driven approach. So that is the point, and that is the difference, and that is how we are creating value for our customers.
Mr. Pratik?
Any other questions?
Mr. Pratik, do you have any further question?
No, this was very helpful. Thanks.
Thank you.
Thank you. Next question, please. Investors? Sir, I think we have covered majority of the questions. If there are no further questions, can we conclude the session? So one question in the chat box from Mr. Pratik. What are the risks as per you that you can push forward your plans for the ambition? What are the risks?
I didn't get the question exactly.
What are the risks as per you that can push forward your plans for the ambition?
See, apparently whatever risks existed, so I take risks as an opportunity. So we have already whatever foreseeable risks we saw, we already have a counter plan for that. So apparently, I would say that uh, we have addressing mechanism for the risk. So we are walking quite in alignment with the vision that we have, and uh, definitely risks as and when they come, they would be uh, addressed, and the plan shouldn't get delayed because of those risks.
Thank you, sir.
In fact, Nishan ji, बहुत अच्छा लगा. I think thank you for the information and all the best from my side. Thank you.
Thank you.
Thank you, everyone, for your
Thank you
time
for
and
having me.
Yeah.
If there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you, Avinash sir. Thank you,
Thank you.
Nishant sir.
Thank you.
Thank you.